So you're new, you're interested in the market, and you keep hearing or seeing this term day trader, day trading. What exactly is this? That's what we're gonna hopefully clear up in this video. So the way I wanna break this down is kind of two perspectives. You have the surface deep perspective, and then looking down below the surface, kind of looking at the nitty-gritty details. What do I mean by that? Well, let's just say that you're flipping through the newspaper, if you even know what that is, depending on your age. Wait, what's a newspaper? Or let's just say you're on a website and they have some stock prices. What does stocks do for the day? What does the market do? But let's just take a stock. So let's just say that AAPL, which is Apple, you're looking and it said, Apple for the day was down 2%. And that's what it's telling you. So this right here though, that's just the surface deep interpretation of kind of the data, meaning, okay, it was down 2%. And a lot of people, if you're new, maybe you're thinking, all right, well, if it was down 2%, then people lost money on the day because it was down 2%. Kind of true, but this is where we need to look into, the details of things. And this is where day traders come in, or day trading. Because sure, Apple may have been down 2%, but within that 2%, the day itself, so breaking down the day. So when we do this, this is kind of the details of the day. When you look down, it may have looked something like this. And then over the course of the day, so let's change up colors here. So here was the start. And then here was the end of the day. And that is what's resulting in the negative 2%. But within this, notice what happened. And this is where the day trader lives. There is opportunity where a day trader could have bought and sold, made some money. There's an opportunity where, again, day trader could have bought, sold, made some money. You know the cliche saying, buy low, sell high? Well, again, buy low, sell high. Now this would imply that the trader was perfect, so I'm not implying that. I'm just trying to illustrate that. Sure, on the surface deep, something may say it was down 2%, but looking at the details, breaking down below the surface, you can see that on the way to being down 2%, there were opportunities where the stock went up on numerous occasions. There's no such thing as a stock that's literally gonna drop straight down the entire day. All stocks are gonna have little price movements up and down, up and down. And again, this is where the day trader lives. A day trader is spending the day, remember, this is just one day right here, but they're paying attention, trying to look for price fluctuations within an overall situation. In this situation, down 2%. Let's look at another one. So in this situation, hey, Apple, 0%, meaning it didn't go up, it didn't go down, it was a 0% gain, loss. There was no gain or loss, 0%. So to somebody that's new, which is perfectly normal, I mean, if I'm putting myself in the new person, like, oh, wow, nobody made any money. But hey, at least on the good side, nobody lost any money either. But again, this is just the surface deep, right? Let's, again, break things down into detail. And sure, things close at 0%. So let's go a little bit different here. We have our start of the day. And then over here, we have the end of the day. So again, like I said, day, because we are talking about what is day trading, day traders. But within this period of time, it could have been something like, so it started here, maybe it had, and then came back down. So again, looking at this, I hope you see where I'm going. Sure, on the surface, oh wow, yeah, that was kind of a crummy day, a very neutral day. But for a day trader, I mean, again, if the stereotypical buy low, sell high, I mean, there's a profitable opportunity. There was one. Heck, here, if you didn't even buy low, but you got right here, you could still sell it up there, and so on and so forth. Still opportunities for the day trader to make money by day trading within the, the nitty-gritty details of an actual day. Let's look at one more situation. So in this situation, you're flipping through the newspaper, going through your sites, and you see, oh wow, Apple was up 5%. And it'd be very logical to think, wow, yeah, people are making money all over the place. But in all actuality, being up 5%, people could have actually lost money. Who? Well, the day traders, those that are day trading. Because again, let's look at the details here. And I know I keep reiterating this, but keep in mind, that stuff is just surface deep. What is a day trader? Well, they're going below the surface. They're actually looking at what's going on. So in this situation, again, we have our start of the day, and then our end. And we know our end's going to be up there because it's plus 5%. But the price action could look something like this. Now, how could somebody lose money here? Well, there is something called shorting in the market, meaning you make money when prices go down, you make money when, let me say that again. You make money when prices go down, you lose money when prices go up. I'll put a link down below the video where I dig into what exactly shorting is, or in here, maybe you hear somebody say, hey, I go short, I went short. So again, if you're not sure what I mean, if that's, wait, what you mean you can make money when prices go down? Yes, you can. But in this case, like I said, you can also lose money by shorting, meaning if prices go up, you are losing. So people that were going short, again, meaning they wanted the price to go down, well here, they lost money. Here, they lost money because the price is going up. Again, here, a little bit more, lost money. So just because you see a stock is green on the day, that also doesn't automatically mean that people were making money because it was green. People that were shorting, going short, day traders that like to short, you know, all those different kind of terminology, you know, kind of put into one, those people could have actually lost money on days like this. So the whole point here being is, first, day traders are looking at what's going on within the day itself. Just to reiterate, this time period here is a day. So that's what they're doing. They only care about capturing the price movement within the day and looking at the surface, you know, just the surface of things, whether it's a green day, meaning that it's a plus percentage, a red day, meaning it's a minus percentage, or a break even. That really doesn't mean much to a day trader because for them, they care about what was going on within the day itself. And that's what day trading is. That's what a day trader does. They're looking at intraday price movements, those price fluctuations, and trying to capitalize on them, which includes potentially being able to make money when prices go down. So again, that video is down below. I don't want to, harp on that anymore, but that's what a day trader is trying to do. If you hear somebody saying, hey, I'm a day trader, that means they are focused on the market, laser focused. I would assume that these people don't have full-time jobs because it's going to be hard to be focused on the day itself if you have to go and do, different jobs for your actual day job, different tasks and such. So now some people with full-time jobs, there's some people in our private trading community that do work full-time jobs, and hey, you know what? They only need a couple hours. So it's not like you have to spend the whole day. Some people just need a few hours. Some people want the full day. So it varies within that, but from a broad scope of things, that's what a day trader is. A day trader looking for those intraday price fluctuations and then trying to capitalize on them, whether the prices are going up or down.